After 26 days of sideways consolidation, Bitcoin has finally broken toward the downside, reaching our target of 25.2k. How much lower can Bitcoin go? Will Bitcoin bounce from here? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has finally broken down from the 26-day sideways consolidation to retest the major 25.2 to 24.4k support. In today's video, we're going to be discussing what this means, what the charts are looking like from a structural and technical perspective, high time frame targets, and even a short-term analysis. Before we get into it, smash your like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency and Bitcoin alike. If you are interested in trading, join our VIP channel. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You can see this trade over here actually ended up reaching all targets. If you're interested in joining that group with over 600 members, including access to our general chat, our trading chart and education chat, our trade setup chat, our help chat, our daily video chat, and our news chat, you can go ahead and contact me in the pinned comment in the free channel to go ahead and get access. Let's dive into the video, guys, starting on the market data. How are we currently looking for the month? September is red. It is down 3.12%. And remember, guys, we've said September is historically a red month. If we take a look at Septembers in general, we've had 13 Septembers for Bitcoin. 10 of those have been red, 3 of those have been green. The average chance of September being red is 76.92%, meaning there's a 76.92% probability that this September will close out red. If we take the total combined profit and loss, okay, gain and loss over the monthly closes for every single September and divide that by the total amount of months, we come at a number of negative 5.43%. This tells us there is a 76.9% chance that September will be red, and the most likely drawdown is going to be negative 5.43% from monthly opening price. So we take a look at that monthly opening price, which is going to be around about 29.5. We can draw that, or 25.9, sorry, we draw that down 5.43%. That takes us right down perfectly to retest the midline of the Gaussian channel, and it takes us to 24.4. So that is what September has in store. That is what September is telling us by the data. If we take a look at our volume is up 74% at 75 billion, and liquidations are actually up quite a lot. They're sitting at 167 million, and that is up 120% in the last 24 hours. We did say in yesterday's video, guys, if we do see a drop below that base of support on the small time frame, we will see a very large amount of liquidations occur just below this support level. And a whole heap of stop losses for longs over here, a whole heap of liquidation prices for over leveraged longs, and a lot of those positions have now been wiped out as we have moved towards this lower area of liquidity. That has resulted in a massive $150 million in long liquidations. Moving over to the volatility index, again, not really much has changed. The 30-day is still kind of pushing sideways, and the 60-day is pretty much doing exactly the same thing, guys, pushing sideways, a slight little drop down, but not too much happening over here. Let's go ahead and get into the DXY. The DXY has seen a short-term rejection from this high time frame resistance zone. Again, this high time frame resistance zone is the distance between 105 to 106, and again marks about a 280-day long horizontal macro resistance. This is going to be acting as a high time frame bullish trigger, meaning if the price is able to break above this level of resistance, we enter a macro uptrend that could theoretically take us as high as around 108 to 110. However, when resistance is resistance, resistance is resistance until it is not. And right now we are testing resistance, and thus the probability of even a short-term correction was higher than a clean breakthrough. And we have so far seen a short-term rejection play out. Although a very short-term rejection, it has still playing out. We saw a slight bearish divergence develop with the price action rising and momentum falling. This signified we have a decent amount of exhaustion moving into this resistance. We have seen that short-term pullback. However, this short-term pullback has not been strong enough to break the uptrend of the current structural formation. We are in a rising channel formation. Again, this is a bearish structure, meaning it does represent overall exhaustion at the top half. However, it is an uptrend until it is broken, and therefore, while the DXY remains above this uptrend support, we have to assume the price can continue upwards. If we lose this diagonal support line, that is when we're expecting rejections and retracements, potentially towards this block at 102 to 103. Of course, this would be bullish for asset prices. This would be incredibly bearish for asset prices if we continue upwards. S&P 500, Dow Jones, not all that much happening as of right now. We have seen a slight push up, but again, not really seeing too much price action over here. We don't really care about anything that happens while the price remains below this low. Until then, anything should be considered an exhaustion rally. And again, until we break over this point, we will be looking for rejections towards our uptrending support line. The same goes for the Dow Jones as goes to the S&P 500. Again, for both these respective assets, if we do see a break below these uptrending support levels, we can see high time frame continuations toward the downside. So definitely keep your mind open for that. Let's go ahead, guys, and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWow exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. And there is so much going on the charts, and we need to talk about what is really happening. So after numerous weeks of sideways consolidation, Bitcoin has finally seen that retest to 25.2 to 24.4. And this is the last line of defense for the bulls on the macro charts. So we're discussing in massive detail today exactly why that is the case. First and foremost, we have to identify what is happening and what these ranges mean. So as you can see, we have gone ahead and annotated these charts with some key identification levels. Above 32k, we are macro bullish. Okay, we are weekly bullish while we remain above 25.2k. However, we are in a weekly bearish trend while we are underneath 28k. So again, you have to make that little distinction. Overall, in terms of macro biases, we are weekly bullish above 25.2k. However, if we take a look at the short-term trend or weekly trend, we are in a weekly downtrend. That weekly downtrend has not yet progressed into a macro downtrend, as we are still holding above that trigger point on which the price flipped weekly bullish, meaning the 24.4k support is going to be the point of which flips the price action from a weekly bearish into a macro bearish trend, and therefore the distance between the upper and lower trigger point of the support range is going to be the range of support, the major bullish support sitting between 24.4 and 25.2. So straight away, we know how significant this is. If we lose 24.4, we run the risk of entering a macro bearish trend, which could push the prices significantly lower to 25.2. While we remain above 24.4, we have the possibility to reclaim control and push upwards. However, to determine the probabilities of each of those moves, we have to look at the strength of price action from a technical perspective. So what are the probabilities of Bitcoin actually holding support here or breaking through this support? Let's go ahead and talk about that. So first and foremost, we can do that from a technical and we can do it from a structural perspective. So to start from a structural perspective, we have a head and shoulder pattern which developed over the course of around 9 months on Bitcoin's price action. Again, a head and shoulder pattern does not require the head to be higher in height than the shoulder. All it requires is the distance between the peak of the head to have a larger vertical ratio between the neckline in comparison to the neckline and the peak of the shoulder. In this instance, you can very clearly see the distance between the head and the neckline far exceeds the distance between the head, the shoulder peak and the shoulder neckline retest on both the left and right shoulders, and therefore we have a very valid and very real head and shoulder pattern. If we apply the head and shoulder pattern breakdown from the head towards the neckline and drag that to the breakdown point, we can see we have a measured move. A measured move is, simply put, a projected range of which the price could move within based on the structural development we have seen in the price action in the past. This would signify the possible maximal range Bitcoin could move towards based on the structural formation is 19.2k. Remember, measured moves are not here to outline targets. They're not also here to tell you where the price is going to go. They're simply telling us, based on this structural formation, the possible range of which Bitcoin could move within is this outlined range based on the ratio and distance between our peak of our head and the neckline of our head and shoulder formation. So when does 19.2k become a plausible target? For 19.2k to become a plausible target, Bitcoin will need to break below the high time frame structural support, because what takes precedent over these measured moves are liquidity levels, tangible levels of support, areas of which the buyers are going to be defending or where there are significant amounts of buying orders. These real lots of data take precedent over hypothetical measured move ranges. So before we can say 19.2k is a target, before we can say we expect this measured move to play out, okay, any more than it already has, which has already played out a fair bit, we're about 33, we're actually about 40% through that measured move, we have to lose the 24.4k level. So how can 24.4k be lost, and will it be lost? Let's go over to this chart over here. If we take a look at our Ichimoku cloud, I've been watching this over the last few weeks, and if you've been watching the channel, you would have had this one kind of in the back of your mind, watching it, planning for it, just keep your eye on it. And what we have seen now is we've seen a break below the cloud of the Ichimoku cloud over here, okay? We have lost that leading span on the Ichimoku cloud. This is, of course, a bearish signal. We do have 23 hours and 30 minutes remaining for this candle to actually close, and that will be necessary for the confirmation of this breakdown and this bearish signal, but as of right now, it is looking very bad. If you watched yesterday's video, you would have known momentum, the lagging span, actually pushed into the clouds. And we said in yesterday's video, this is a very early sign of significant weakness and increases the probability of a breakdown. And now we have actually seen how the price has followed through after that break-in, once again showing how momentum is a leading indicator for price action. So right now, while the price remains below the clouds, while the lagging span is within the clouds, this overall is bearish. It is by all means bearish. There's nothing bullish about what this indicator is suggesting on the charts. So, if we look back at the past, what does this really mean for the price action? Every single time we see a loss of the clouds, okay, from the top, and we see a breakdown through, we generally see a downtrend develop. Now, what the clouds don't tell us is how far the downtrend will actually take us, but it does tell us the price generally moves toward the downside. So over here, we only saw a small little retracement, okay. Some instances, we see very large retracements. Some instances, we see very small retracements. So the key thing to outline over here is the Ichimoku cloud tells us the direction of which the price is likely to move, but we still need to identify targets based on liquidity levels on the charts from our VRPV or structural analysis. So what it does tell us is, however, while we break through this level, retesting and support, the probabilities of a continuation through exceed the probabilities of a bounce, okay? If we close below this within 23 hours. So that is one piece of evidence to suggest this level of support is unlikely to hold. Okay, number two, what is another bearish sign? What we can see over here is the moving average is starting to cross over. We're seeing the 50 EMA push through the smaller time frame moving averages. While we see that occur, when we see the 50 actually push through, that signifies bearish strength is starting to rise, and the downtrend we have been in is starting to gain that strength. Of course, this is not a good sign for the bulls. Moving over to our monthly and weekly charts. If we take a look at the monthly chart, Bitcoin's price is currently sitting just shy of 25.2k. If we go ahead and really zoom in over here, we can see 25.2k by the dollar is represented by that 50 EMA point on the monthly chart. We've really gone ahead and zoomed in here to show you just how precise that is. Okay, now I've gone ahead and shown you the monthly chart is lagging a little bit, but we can see the price is technically currently underneath the 50 EMA on the monthly chart and has closed that daily candle below. If we do manage to close this month under 25.2, which based on September averages, okay, negative 5.43%, the target is under 25.2, it's 24.4. The probabilities of a continuation lower on a macro scale further increase. That is another sign the probabilities of a break and loss of the support level will actually play out. Number four, if we take a look at our weekly chart, okay, we can clearly see we have our last line of support at 24.4 based on the midline of the Gaussian channel. If we lose the midline of the Gaussian channel, we are very likely to see a continuation through the Gaussian channel and losing or a loss of the lower band. If we break the midline, we are very likely to break the lower band. That will take us sub 20,000 right towards that measured move target of the head and shoulder pattern, which is 19.2k. So you can see from a structural perspective on the macro chart, not only are we in a delicate position, we are actually in quite a weak position. We're moving into this major support with building bearish strength and massive amounts of weakness. This tells us the probabilities this level will be defended actually are lower than the probabilities of a break through this support, even though support is support until it is not. Remember, not all supports are always going to hold, not all resistances are always going to hold. You have to be able to identify the probabilities of these being held or not being held based on our technical and structural level. Now, here is another important thing. Just because there is a greater probability of a breakdown, it doesn't mean you should be entering high time frame shorts right now. Your high time frame shorts should have already been taken. You should have already taken those, whether it be up over here, whether it be over here, whether it be in this range, okay? Now is the time to watch how things develop. Just because there's an 80% chance of a breakdown doesn't mean it's going to happen. It'll only be certain when it occurs. So you want to look for new shorts, wait for that breakdown, wait for that loss of 25.2k on a higher time frame, wait for the loss of 24.4k, and then position yourself correctly, okay? If you're jumping in here, you are going to be technically late, and maybe you might be right, but you're still going to be late and you're exposing yourself to risk because you were late, okay? So, just because the data is suggesting one thing, it doesn't mean your actions have to particularly align in this particular scenario, okay? It is better to wait for the price action when we enter these high time frame levels of significant importance, where decisions can change, where market price action can change, where anything can really happen, okay? So just because the data is telling us the higher probability of a continuation down, pop that in the back of your mind, understand what's happening, so when you see a breakdown, you know what to do, but do not front run this high time breakdown too much unless you already have those positions open, okay? Let's go ahead and finish up in the short term. Again, we are looking horrid, all right? We're not looking good in this range, guys. The bulls have lost all control. They lost all control. The last line of support is this 25.2 to 24.4k level. If they do not defend this level, we continue lower, okay? For the short term, for the bulls to reclaim control, the price needs to get above the POC, which means we need to break back above this low resistance, we need to break back above this POC level, and for the bulls to really push the price upwards, again, 26.3k is going to be the trigger point. Breaking above 26.3k will result in a continuation upwards. Until then, the trend is bearish, the short term is bearish, the price is expected to actually continue toward the downside. Thanks for watching, guys. Hope you enjoyed, hope you learned something, hope you're now more in tune and more aware of what's happening in the macro charts and the probabilities of this level being lost. And with that being said, guys, check out the Crypto Academy courses. It is the link down below. You can check it out. It's our 10-unit course to teach you guys how to trade. Thanks for watching. See you guys in the next one. Cheers.